What is up? What's up, everybody? Listen, it's Sunday night, June the 28th, a little after 8 o'clock p.m. My name's Boyd Selby, and I wanted to go through tonight the Sunday night gap trade strategy and see how this played out. So here we go. I'm going to share my screen here, and we're going to go through and look at my chart. This is going to be a live chart. This is in Thinkorswim. This is the platform that I trade. Very similar to other trading platforms. I trade the futures. So we're going to be looking at the Dow tonight, the YM. That's the future symbol for this. It is very similar to the US 30. In fact, it's identical in the way that it moves. It's just traded from a different platform. And the symbol is different. Just US 30 equals the YM. So we're looking at a live chart on the Dow. So here's the way this works. On Friday afternoon, the market closes at a certain level. So Friday afternoon, on the September contracts of the Dow, the market closed at 24,900, 24,900. So if you looked at your TradingView platform, it might be a little bit different. 24,900. So the way the gap strategy works, potentially, if this works as it's designed, it's either going to gap up or gap down if it's going to have a gap. It's not always guaranteed. It isn't perfect. It doesn't work this way every time. But over the last few weeks, it's been working out quite nicely. So the theory is, in this particular example, the market gapped down. It gapped down to 24,744, 24,744. So that's about 115 point gap down. So the theory behind this trade is that over a period of time, it will come back in and look to close the gap between 24,744, where it went down to, and where it closed on Friday, 24,900. It's 115 points. So the trade would be that you come in down here at the bottom. Ideally, you pick it up at the lowest possible point. I waited a little bit to see that there was some momentum coming back, and price was moving in the positive direction with some momentum. I took the trade at 24,783 is when I actually got in the trade. So in theory, what you would anticipate would happen would be that price would move in this direction, and you would look to close the gap. You would look to close the gap, that entire gap. Now that could happen in 5 minutes. It could happen in 15 minutes. It could happen in a couple hours. It might not happen until the London session. And you know what? It might not happen for even the evening. But the theory is that over the course of a period of time that it would close that gap. So statistically speaking, especially over the past 4 or 5 weeks, this gap trade has worked out very nicely. So we placed the trade down here at the bottom. We're going to place whatever we're comfortable with our stop loss. And we're going to come up here and anticipate the market will close the gap. You're going to decide what your take profit would be. And in this particular example, my take profit was to ride it all the way up to where it closed the gap. So for me, that was right at about 100 points. So immediately when I placed the trade, I placed my stop loss, I placed my take profit at 100 points. It went into a little bit of consolidation. It pulled back a little bit, and then it went up and hit its target. So Sunday night gap trade, 100 points on the Dow futures. You do the math. I won't tell you what that is in real dollars because I'm going to be sharing this publicly, but you do the math. You know what $1 on the Dow is worth. That's 100 points. So that's the Sunday night gap trade. We'll be showing this to you from time to time as this works out. If you have any questions, please reach out. I'm going to be putting this on YouTube, so please subscribe to my channel. And it was exciting to share this with you tonight. Again, my name's Boyd Selby, and have a great Sunday night, and have a great week.